Well, hey folks, this is obviously Jeff and Jonathan Camarda and Anna and Lou, and we're going to do something a little bit different with the videos this week. Hopefully that you like it, and kind of talk about a number of issues and then some financial planning topics that you may enjoy. So we're going to begin with our impression of the unfolding world economic situation. I know Jonathan has a number of deep thoughts on this as well, but almost unexpectedly, things seem to be working out, and this is apolitical. We're not a fan of any political party, of course, but things seem to be working out better tariff-wise and inflation-wise than I think a lot of folks had expected. Surprisingly, the economy is holding up well. The inflation numbers are reasonable. The United States seems to be getting a lot of traction and a lot of revenue out of the tariff strategy. So it's hopefully this continues. But the market so far has performed well in anticipation of continued economic strength. Jonathan, what's your view on that?
Yeah, no, absolutely. In fact, the PPI numbers that came out today showed that...
Producer Price Index and inflation measure.
Absolutely. This is why we're doing the group videos, right? So we can define that. So energy, food, and transportation all were actually mild. So from an inflationary front, Jeff is absolutely right. Dollar's picking up, though, versus the yen. I know it's been a week for most of the year, but picking up versus the yen, the euro, maybe short term. And so that bodes actually pretty well for large cap stocks, which we'll get to in a little bit. So I do agree. The dollar's coming off the mat, but hasn't been overtly strong, which obviously means inflation hasn't been out of control. Jeff's correct as well. The tariffs may be a little overblown.
Which is good for U.S. exports, by the way.
Well, we're gonna get into that in yeah, absolutely, because they export their goods, so it's cheaper for other countries to buy. The tariffs are bringing in a lot more revenue, as Jeff intimated, than thought. In fact, trade deals might be optional. Maybe that's not the ultimate goal. It's just the revenue coming in. However, consumers may be paying more, maybe sharing out with some of the companies here, but like Jeff said, the net's been pretty good from an economic standpoint.
Yeah, so overall, steady as she goes. Hopefully, things continued in this vein, and it's good, for the United States. So that's very positive. Jonathan, why don't we segue into where you think, as our Chief Investment Officer and lead portfolio strategist, the market is heading. It's continuing to do well despite that gut kick that we had early in the year. Do you think that will continue? What's your read on the market?
Yeah, well, right now, as they say, up and to the right, your leading sectors have been more of your bull type stocks. Your technologies, industrials, discretionaries, and communications are leading the way. Healthcare, of course, lagging, and as such as well staples, which in English means that again we have a bullish move. Now, I will say seasonally, towards the end of July into early August, September, it gets to be what they call hurricane season, metaphorically speaking. So generally, you can expect a pullback, maybe 5 to 10%. But generally buying opportunity, because remember, unlike when we got back in the market, a lot of institutions have been out of the market and waiting to get back in, so new cash will likely flow in to try to catch up to make their year-end numbers there, Doctor.
So, do you care to expand on that?
Yeah, no, absolutely. So we see expansion in your semiconductors, and of course we've seen a run there, and of course the the 360 that we've had with China. Obviously, you've seen with NVIDIA, not to get into individual stocks compliance, but NVIDIA, your AMDs that are benefiting, which is again a risk-on situation. As far as some of the tariffs recently, by the way, leading the uptrend, oxymoronically, even though inflation's not out of control, you have your metals like your copper is really soaring. Now, we didn't just look at a tariff on copper. Really, it's a tariff on China, guys, because if you really look at the one of the major producers, it is China. Refining's done in Latin America, but China actually owns a lot of the Congo, so that's kind of a backdoor tariff there to control, because copper is not only an industrial metal, national security regarding a lot of production on housing, transportation, and defense that we do here.
Critical, in the construction, wires, and all kinds of stuff.
But kind of a chess move, yeah.
If I may, saying on that a little bit, interestingly, the two tariff holdouts are Canada and China. And but the asymmetry, we buy so much more from China than we sell to them. It's really dropping the bucket. So, we'll impose much higher tariffs, but the dollar, the actual cost of that is pretty nominal.
Right. We had a huge downturn in the spring and then the reversion. So if you just woke up today, Rip Van Winkle style, it'd be a normal year return-wise if you really just fell asleep to all the drama.
But we still are in the midst of, sell a man, go away. So we'll see what happens before hurricane season is over. And that brings up, a really interesting point. Camarda is one of the few, I think, investment advisors that actually practices technical analysis, downside protection, market timing, if you will. The point is that we have a number of custom strategies, some of which are designed, intended to protect against the downside, and others are mostly risk on and stay exposed to the market. And as clients, it's important really to have a sense for which sort of investor you are. Is it more important, to try to protect against the downside? And the market is trading at very lofty levels. Eventually, it's probably going to come down. Is it important, to have some downside protection at the cost of not going up as much as the market does in a really good market? Or is it more important to be fully invested, and when the market goes down, be fully exposed? So go up, but if and when it really goes down, you'll take that ride down. And it's not our point to tell you what's important to you. I mean, you'll get advice from Anna and Lou and the rest of the team as to what we think is prudent for you in retirement. You don't want to risk too much, but at the end of the day, it's really your decision and the instructions to us as to how you want to balance these two forces. You really can't have your cake and eat it too. You can have some of it maybe, but if we're looking to protect against the downside, the protocols and the indicators that requires really will probably put a cap or truncate some market performance in good markets like we've seen since February.
Absolutely right. So if you look at bear market retracements, during a 38% drop in 2008 in the S&P 500, you'd essentially.
What does that mean, bear market retracement for our audience?
Yeah, so in English, a 38% drop would be about 70% gain to make that up. So most of our clients, like you, have worked hard for your money and generally have very little money coming in and are living on the money that you have. Therefore, most of our clients, instead of having FOMO, fear of missing out, they have what I call FOAM, fear of losing more.
All right, so I think what he said, and correct me if I'm wrong, is that if you get pounded in a bear market, you have to make a lot more just to break even, and that's something that's really important to consider, particularly if you're at, in, or near retirement age, as many of you are. Well, thank you very much for that insight. So this happens to be estate planning quarter, Q3. Next quarter is going to be year-end tax planning and asset protection. We have a number of questions that you've gotten. Who would like to give us the first question?
Yeah, I'll go first. Jeff, what is probate and why do I want to avoid that as a client?
So probate, that's a great question. So probate basically is the legal process, a court proceeding that determines what happens to your stuff when you're dead. Right, and it can be expensive. It's very public, which means that your assets are published in a newspaper. It's public record. The family members, outlaws or even criminals, have access to that information. There could be will contests. It can take a long period of time, and you may not get your stuff may not go where you want it to. So avoiding it's also pretty expensive in Florida. Last time I looked, if you have a couple $1 million estate, it's like 50, 60 grand. So it's completely avoidable. And by the way, if you have a will, or if you have a trust that's in your will, as many folks do, if you have a really thick will, you think you have a trust, but you have a thick will, it's called a testamentary trust from last will and testament. And that guarantees probate, which I think is really a bad way to go. So if you have a will, that's basically a letter to the judge, and the judge's job is to read it and determine, is this in fact the last will, or was there another one that was issued after? Is it the last will and testament, or is it an older one? Have those instructions been superseded? And then his job is to interpret, or her job to interpret the will, and then go through the process of allocating the assets according to what it's a pain in the butt. It really is. So ways to avoid that are having a living trust. If I have a living trust, and a living trust is placed during my life, say if Anna and I are married, and we both die, and then the assets are in the trust, it completely bypasses probate. You save the expense, it's private, and you're sure to get what you want based on how we set the trust up while we're alive. It's a much better way to go. So-called living trust just means that it comes into being during your lifetime, and that you've actually funded it. You have to put stuff in it. and beneficiary, your IRAs and other things with the proper language in a trust to the trust to tie everything together. So there's probably more. Did I cover everything?
Yeah, they kind of answered the question that I was going to ask, which is why is a trust more, better, more beneficial than having just a, simple will. So I think you kind of covered that.
Actually, there's a lot of other reasons besides avoiding probate and keeping things private. But an actual situation, Kim and I are married, and I've got children from a previous marriage. Kim is, I don't know, 13 years younger than I am. So, if I go first, which is the way to bet, absent having a trust, most people have what's called an I love you will. Everything goes to the spouse, in this case Kim. Kim and I have 2 children together. I've got 3 kids in a previous marriage. And then Kim has got all the money, right? And she may decide to give it all to our kids and disinherit my 3 children. Or worse, after a suitable period of mourning, love may kindle anew in Kim's life, and she may get remarried. And then if she follows the simple I love you will common procedure, then maybe new husband winds up being her heir. And then Kim dies. And all the kids are unintentionally disinherited, and the pool guy gets all the money. So it's really, by having a trust that's set up during the lifetimes, both spouses agree on what they want to happen, and then when the first one goes, the rules are clear and there are controls that are put in place to make sure that things flow a lot smoother. Other questions?
Yeah. In the same vein of probate, why should a client be concerned about guardianship?
All right, so guardianship, that's really an important consideration. And guardianship is when, during my lifetime, if I get to the point where I've got Alzheimer's, or I'm disabled for some reason, I can't manage my own affairs. And absent the right planning, I've got to go through court proceedings where the judge, will make him Judge Lou, and hanging Judge Lou. And it's Lou's job to determine, first of all, that I'm incompetent. I'm not legally competent to manage my affairs. And he's got to do that in person. I've got to be present. It's very demeaning, very expensive. And then Judge Lou has to determine who's going to be in charge of my money. Who's got the checkbook, right? He's got to report back to the judge every few months or every year, whatever, and it's expensive. And by the way, judge does not have to appoint my smarter brother Jonathan to be my guardian with a checkbook. The judge can make his fishing buddy or anybody the judge wants, and it happens. So guardianship is really something you want to avoid. As expensive as the meaning, it's really a horror show, and having a living trust is probably the most effective way to do that. Powers of attorney can do it too, but there's a lot more risks. Did you have any questions?
Yeah, so I guess why is having beneficiary and updating beneficiaries regularly, making sure that they are accurate, why is that important for a client?
Well, again, that's a great question. It's really, really important. And actually, I think that we did a video, a webinar on this. Mm-hmm. So maybe you guys should, for the clients that care about it, we can get it out there because it's a really complicated area. But the short of it is not having the right beneficiary considerations can, one, really, really screw up taxes. For instance, if I use a trust without the right language and I've got $2 million, and if I make my wife the beneficiary, she's got all the money, but there's no control on it. She can take the pool boy to Italy or disinherit my kids. Then using a trust can control that, but without the right language in a trust, she loses a lifetime stretch. She's not going to be able to control the tax and pay a little bit each year. She'll have to pay him out over 10 years, something like that. Mm-hmm. There's a lot of other considerations. It also is real pain in the butt. You got some clients, I'm sure, that this account's got, this person's the beneficiary, this one's a beneficiary, here's a transfer on death account, and having that all coordinated as people are born and people die and the accounts values change, it's a real mess. But it's by having a trust as the primary distribution mechanism, makes things come out a lot simpler and fairer. So anyway, guys, thanks so much for watching. Lou, Certified Financial Planner, Jonathan, Certified Financial Planner, Anna, Certified Financial Planner, and of course your humble servant, Dr. Jeff Camarda. Let us know if you like this format. We had a lot of fun doing it, and we're looking forward to producing more content for you. Thank you all. Happy Midsummer to you.
Mahalo.